Hi, I'm Matt Badiali, and I'm here with my colleague Chad Shoop. We're live from the Total Wealth Symposium in Las Vegas, Nevada, and we wanted to take a minute to talk to you guys about income. We know, and Chad, you know too, we had a lot of subscribers who were really excited about generating dividends. They wanted to learn how to they generate extra paychecks, make their money and their invested money work for them. We did it by buying dividend-paying stocks, but you have a little different mechanism. How do you do it?
Yeah, so my favorite strategy for collecting income is selling naked put options. And when you do that, your biggest risk is that you may end up owning shares of the stock. But basically, at that point, you're getting paid to own shares of the stock. And that's why my number one rule when we go to sell put options is that you make sure you sell them on a stock that you already want to own. So in that case, your worst case scenario is that you may end up owning shares of the stock that you already wanted to own and you got paid to do so.
So your risk is you wind up having to buy a stock. What's your upside here when you're doing this? So you're buying a put or you're selling a put option, right? And so you're selling the right but not the obligation to buy the stock, right?
Yeah, well, we have the obligation to possibly buy shares of the stock. It's the buyers that have the right that they can exercise that right during the transition of during the time that we hold that put option. But basically, we're just trying to collect that option premium. We don't necessarily want to own the stock, and most of the time we will not end up owning shares of the stock at all, but it's just our worst case scenarios that we may end up owning shares of the stock.
And how much income can you earn by doing this?
So there's two different ways to trade it, and one is in a cash account, and that's where you're looking to collect about 3 to 5% in just 3 months. So you can do that 4 times a year, and you're still looking at double-digit gains over the course of a year. And then the other way is in a margin account where you put up less capital, and it's different than a stock margin account. And an option margin account, you're not paying any interest on that excess capital.
Okay.
But then you're able to generate bigger returns of as much as 15% in just 3 months.
Wow. So on a regular, when you're doing a regular trade, you can do it up to 4 times a year. You can generate 3 to 5%. I mean, that's like a 20% dividend.
Yeah, you can still get up to 20%, all from income.
Man.
And yeah, the typical trade lasts about 3 months for the ones I recommend.
And if you're trading margin, it's even larger.
Yeah, you can be up to 60% or more in a year on your margin capital.
Well, there you go. If you're interested in trading options for income, Chad Shoop's the guy you want to talk to. And if you like this video, like us on Facebook, follow us on YouTube, and thanks very much for watching. Matt Badiali here with Chad Shoop. Thanks very much.
Thank you.